This industry has seen a galactic amount of shareholder value destruction over the last 12 months. Are we through it? How should we view an industry that has done this, and does that change our investment view of it?
Yeah, I think it's a great point to start on. I mean, we've been putting as much pressure as possible on management teams to rein in some of the over-enthusiastic investing of the cash flows they've been making over the last few years, and to increase the amount that they share back with the owners of the business, the shareholders. We're having some success from that point of view, but I don't think we're at the end yet in terms of these write-downs. Obviously, the big one that could be still to come is the combination of Xstrata and Glencore. Yeah. Now, when that combination takes place, I'm sure that the accountants and the management teams at Glencore will be running a very fine tooth comb over some of the asset values inside the combined group to make sure that any of the things that have been that the other companies have been writing down in the past, that Xstrata might have to do the same, gets dealt with as soon as possible rather than as a hangover into 2014. So I think there's still one big one out there. There'll probably be some other smaller ones, but I think you've seen most of the news outside of that.
But do you think that this will be dealt with very shortly? Will it be dealt with in the next couple of quarters for sure? Yeah,
well, it depends on when MOFCOM gives the approval for the merger. So as soon as that takes place, then I think you'll obviously have the combination of the two companies, and then the carrying values will be addressed.
Are the new management teams, the new leaders in place for this industry going to be significantly more conservative than their predecessors?
Well, all of the rhetoric that we've had today out of the management, the new managers in charge of the large companies, has been incredibly conservative. They've talked about no M&A, they're talking about cutting operating costs, huge numbers coming out of operating costs, and also capital expenditure coming down. Absolutely, some of the people that have come into these roles are some of the more conservative individuals. So you look at Sam Walsh at Rio Tinto, he's got a great track record, he's going to be very hard on costs. So I do think we are starting to see this come through. Mark Cutifani, he's got a technical background, he did a great job at turning around some of the operational performance at AngloGold. I'm sure he's going to be addressing a few of those things inside Anglo American, and maybe even helping to undo some of the things that have happened over the last few years which have caused the changes in the CEO there.
Ivan Glassenberg just last month was saying we've always been wanting to keep building and keep putting the cash we generate into new assets. He says we really hope this is a new paradigm in the mining industry, and so what we have to stop doing as a mining industry is basically, you know, break from the past and learn about demand and supply. Is this kind of rhetoric what you welcome?
Yeah, I think we always understand that mining companies run depleting assets. So there's a balance between reinvestment and returns to shareholders, and that balance has to take place. For the last 10 years, that balance has been out of sync. We've had far too much reinvestment and far too much M&A. Yields collapsed, so the shares were no longer competitive with other high-yielding equity investments in a yield-hungry market. So I think what we're now starting to see is that capital investment being reined back in, the balance being restored, yields are starting to rise, and I think that will attract shareholders back to the centre. But at the moment, the breakdown in trust between investors and management is very, very significant. And new management coming in for a few months doesn't repair that. It'll take time.
Just to come back to the issue of M&A, is Glencore done? Glencore was set up. The whole idea of taking this company into the private sector was to provide it with capital, a currency for M&A. We've seen one big deal and some smaller ones. Is Glasenberg really done, or do you think that this industry still may see more M&A, particularly from his direction?
Yeah, I think what we will see in the industry is we will see M&A, which is the reverse of what we've seen for the last few years. So rather than the big consolidations taking place, what we will see is the jettisoning of non-core assets by the major companies. Now, that element of M&A could lead those assets into mid-cap companies and be transformational deals or transactions for those groups. I think some of the larger scale of M&A has probably kind of been put out to pasture for the near term. The financing isn't there for the companies to be able to do this. The appetite from the shareholders isn't there. They want to see more stable rates of return coming from these companies, and they want to see management actually doing what they say they're going to do.
Are shareholders too greedy with their demands for dividends from mining companies?
I think the companies owe us some catch-up, which is where we're coming from, I think, as a group. And so this overinvestment into assets at very high rates of capital intensity, that has now stopped. So as the cash flow starts to come through and the capex isn't spent, then and the balance sheets are all pretty strong by and large for the sector, then the only place for that cash to go is actually to come back to the company. So you look across the space now, all the majors are on roughly 4% dividend yields. That's not a Vodafone dividend yield or anything else. So we're not in that 5+% attractiveness area for the market as a whole, but it's getting very close. We were at less than 2% a couple of years ago.
Once you start to get to those divvy yields, do you see a pop in share prices as you sort of break through into when the income funds are going to start buying these things or buying them more aggressively?
I think it's the main change that we'll see with demand for shares in this sector is when trust starts to be re-established.
Right.
And I think that will take time. So we need to see management actually delivering on what the new promises that they've been making. And that will take, 6 months, a year and a half before people start to say, actually, these guys are doing a great job. They're delivering on what they say they're going to do. They're delivering ahead of expectations, those kind of things, and then you'll start to get that momentum shift. And that was obviously outside of a macro event like another Cyprus or China or US.
Evy, can I ask you about the iron ore market? We had a Goldman Sachs analyst talking about $264 billion in planned projects on iron ore. Is there a concern? Would you ask some of the major producers to actually pull back on some of these projects because otherwise you risk the price collapsing? Yeah,
it's a really interesting subject, that. There's so many different views around that. With regards to the iron ore market, obviously we're at great pricing right now. So you've got to put everything into context. If you're producing iron ore for $30 or $40 a tonne and the price is 130 or 150 or 100, it's a phenomenal price. You're making huge margins. And if you're a Rio Tinto or a BHP and you're producing hundreds of millions of tonnes, that's a gigantic amount of cash flow. So I do think that we are seeing new supply coming through. We haven't had the weather interruptions and the strikes affecting the market. We have had restocking in China, so we've had this bump in prices. Second half of this year we'll probably have slightly lower prices, but the average this year is way ahead of most people's forecasts.